Ever pondered why some of the world's wealthiest individuals are suddenly liquidating their stock holdings? What's driving these billionaires and high-profile executives to cash out, and what does it mean for the broader economy? These are some thought-provoking questions that have been making waves in the economic landscape recently. The trend of stock liquidation among billionaires is a complex phenomenon with various interpretations and speculations. Some view it as a strategic response to anticipated economic downturns. They believe these affluent individuals are capitalizing on the current market peak to buffer potential future losses. Others speculate that new, comprehensive laws expected to impact businesses may be the driving force behind this behavior. These laws could introduce drastic operational costs, potentially diminishing corporate profitability and imposing additional financial burdens on consumers. The economic landscape is a multifaceted entity. Take the Dow Jones's performance, for example. It has seen a substantial increase over the past few years, suggesting a thriving market. Yet this is contrasted by the rising delinquency rates and charge-offs in companies like Discover. It's worth noting that high-profile executives from major corporations, including Discover, Visa, and Amazon, have sold off large portions of their stock, causing a stir in the financial community. Analysts propose that these significant stock sales are preemptive measures against tougher economic times ahead. The introduction of new regulations that could redefine the cost of doing business is a growing concern. The ripple effects may lead to reduced consumer spending power, tighter profit margins for businesses, and a challenging environment for entrepreneurs and investors. Environmental regulations and sustainability mandates add another layer of complexity. Large corporations are increasingly scrutinizing their supply chains and operational practices to align with these new environmental standards. This shift towards sustainability is reshaping corporate strategies and signaling a broader economic transition with far-reaching implications. As the narrative unfolds, we find ourselves on the brink of a significant transformation in the economic and business landscape. The strategic moves by billionaires and corporate leaders might indicate a larger trend towards safeguarding assets and preparing for a future that could look markedly different from today's economic environment. This transition could lead to a realignment of wealth and power dynamics, with sustainability and environmental responsibility at the forefront. This evolving scenario emphasizes the importance of staying informed and adaptable for entrepreneurs, investors, and consumers. As the economic terrain shifts, new challenges and opportunities will arise. Understanding the drivers behind these market movements, such as the push towards sustainability and the potential impacts of new regulations, will be crucial for making informed decisions and thriving in the years to come. In conclusion, while the current trend of stock liquidation among billionaires and executives may raise concerns, it also serves as a signal to pay close attention. By understanding the motives and implications of these movements, we can better navigate the complexities of the ever-evolving economic landscape.